Okay, let me show you how we do analyze the market, especially this is what we call gold. Okay, so how do I analyze gold market? Okay, so first of all, make sure you look at the trend. You can see the trend is somehow it has been consolidating here, but the overall you can see it is coming down. Okay, it is coming down. Okay, why? Because you can see the highs are still high and high. Okay, so we are still waiting for this market. The trend will be a bearish when these highs are broken. Okay, so let me go to this lower time frame here. Let me show you. Okay, let me show you. First of all, let's look at what we call the order blocks. Okay, the order blocks here to trade. I always start with higher time frame. Okay, so the first of all is to spot what we call order blocks. Just listen to this video till the end. Uh, First of all, here, this is where we have our, this is our order block here. Okay, this is our order block here. Okay, you can draw this one to the end. Then we have another one here. Let's draw another one here. Which one is here? This one. So what we look, it is always a base candle, a base candle, a base candle, a base candle, which has not been mitigated. But also we must look at what we call the inefficiency or imbalance, that high momentum move, okay, with that gap. Then what we have to look for is a break of structure. Okay, so this zone has not been mitigated. That's why I have drawn it as an order block. But also we can look at this point. If you draw this one, this is not, because it has been mitigated. This one is not the average one. It is down there. So I can draw here this one, the white one. Okay, the white one. You can see there is break of structure here, but here we had our break of structure. That's why we said this is an order block. Okay. Let me increase the size so that you can see well here. Okay, so my this is my order block here. This is my order block here. This is my order block here. As you can see, we had our inefficiency here. We had our inefficiency here. You can see the end of inefficiency here is this one. Okay, so let's see. So the market is here, okay? After drawing these major ones, because here you cannot draw any order block from here because this has already been mitigated here. So you cannot have an order block here because the price already has mitigated these levels. Okay. So let me go to 1 hour. Let me go to 1 hour and see. Because we can reduce, we always do what we call, you can reduce the size of order blocks, because when they are too large, that means the risk is going to be very, very high. So how can you reduce? You just make sure it is within, okay? For example, this one here, you can see we have another candle here. Okay. Yes, we can just draw here. The upper one here, you cannot change it. So this, we cannot just reduce them. I think they are still the same. So from this point, you can have your own spotting. You can spot your own from the lower ones, okay? Because you have to find a take profit. Even if you're looking for a sell trade here, okay, in gold, even if you're looking for a sell trade here, you must know how to get your take profit down here. That means you have to draw, because we are looking for the here above, we were looking for the order blocks that we can use at the entry points. Okay, but here down we are looking for the order blocks that we can use for the what? For the take profit. Okay, so how do we do? I analyze this market and I'm just repeating it to you guys from YouTube. So first of all, this has been mitigated. We had this order block here, but it has been mitigated. As you can see, the price came back to this zone. This one has been mitigated. This one also has been mitigated here. Okay, so I will come from this point. So all these ones have been mitigated, and the last one is here, because here down you don't have any kind of order block here down. So the last one is here. So I cannot keep going looking at this point, because you can see the prices came back to this point, and we don't have any order block to the left side here. Okay, so we can start from here now. Do you understand? Because all the order blocks has been mitigated. The last order block to be mitigated was this one here. Okay, it has been mitigated already. That means I have to go and check for the next side here to the light. Okay, so here, if you look at this point, you cannot, we don't have any order block here. We don't have any order block here. When we look at this one, almost this one, you can say this is an order block here. This price came, it made what we call, you can see the price went up, kept going up, and that is where the break of structure took place here. You can see, but this one has been mitigated, the white one. This one has been mitigated, the white one. Okay. This one has been mitigated. This one has been mitigated. This one has been mitigated. This one already been mitigated. Even this one, even the last one here has been mitigated, as you can see. Okay. So that means our demands on our order block that is valid at this point is here. So when you find any entry above there, that means our take profit has to be here. When you look at this structure in very lower time frame, you can find some price here. Let's see some structures here. This is how we analyze the gold market. Okay. Let me check at this point here. At this time, we are already in what we call London session. We're in a London session. Okay, we're in a London session. So you can see the price has broken here. It is like it took some liquidities, even though the price didn't break. Let me show you one thing here. You can see the uptrend here. The market has been moving upward, okay? Creating some structures going up. You see, we cannot just enter in this kind of trade here, okay? You have to wait for the black of structure here. Let me show you how you can spot these trades. You can see here we have higher lows, okay? We have higher lows. Let me show you. These are the higher lows. Let me show you from here down to this point here. Let me use some symbols here, some good symbols that you can understand. Okay, let me use this symbol here. So we have, this is higher low, another higher low here, another higher low. Then this one does not broken. Okay, it is still upward, it is still upper, it's still upper one. Let me add another one, this one. Okay, you can see there. Then we have another one there, this one too. So we cannot say that we have to sell before this has been broken. It has been mitigated, but we are waiting for it to be flipped. Okay, so the price must come down here and flip this one. It must come down and flip this one. That is where we can start thinking of selling. Okay, we can start selling, even though we could see we had a very nice, you see this movement that is coming down. Okay, that was we had a minor order block here above. Let me show you in a sorry, in a lower time frame here, 30 minutes. Let me show you. You can see this is our order block here. Very nice order block. It is not very strong because it just break this break of structure, very minor break of structure here. Okay, very minor break of structure. So we are still waiting for this. We're still waiting for this. You can see those guys who are trading lower time frame, even at this point, you had what we call, you could have your order broken. You could take some pips here. So after this one, what we are waiting here now, it is a clear change of character, a clear flip here, a clear flip here. This is live market, okay? This is the live market of gold. So we are waiting for the clear way, then we can find. In this movement, we expect it to have a very strong, what we call this movement here I'm showing, very strong order block here in between that we can use to sell to this point. Okay, so we are waiting for that to happen. Okay, we are waiting for that. We are waiting for this flip to take place here so that we can keep selling here. Having a buy trade here, you don't have strong order blocks to buy. You don't have bullish strong order blocks, so you cannot think about buying, because the only order block that you can think about buying is here below. And how does the market come here? It comes by selling. That's why we want to take this sell trade, and then we can wait here to have what we call a bullish entry. So I think this is the easiest way you can spot trades. And I think I have shown you how we can go to the higher time frame. And if you're thinking about, if the price comes here down and you want to take a buy trade, make sure that your entry is above here, because all this mitigation, all these order blocks, this what we call supply will have been already mitigated, so they are no longer strong. So you have to take your take profit to this level here above. That's why we had to draw these zones from 2 hours time frame. I think you have understood this strategy. Very, very easy concept, as you can see. So I wish you a nice day. You can see this trade, because we have been taking this trade, it is just the same like this trade we took here. Okay, this trade here. So you can wait for the price to come down here. It is going to take some time. Okay, but I hope it moves it is not supposed to move with very, very high momentum here, because if it moves with very high momentum, that means that is not a right mitigation. I taught you about the mitigation. You can have a fake mitigation that is very dangerous, especially when you have a very strong momentum move down to this candle from above there. If you find the price is just coming with very high momentum, it is very dangerous. But it may look nice when it is ending up, okay? And make sure you take this trade during New York session. Don't take it in other sessions, okay? This is how you can increase your accuracy. Don't just trade without any session that you want. You want to expect your price to move, because at this point is where mitigation will take place. Always light mitigations, the good ones, always take place during New York session. That is the session that I like to trade mitigations. Okay, London session is where manipulations are done always. That's why you have to be very careful when you're trading GBP pairs. Okay, so this is the easiest way to trade Euro pairs also. So this is the easiest way you can trade gold like a pro. So have a nice day, my friends. Wish you all the best.